shows green shoots. In the Diamond District today, one of the most well-respected bankers and private equity CEOs in America today, John Kanas, has said 1,000 bank failures will hit the heartland. We hit 100 on Friday. Kanas is now CEO of BankUnited, a failed Miami bank that he bought and is receiving TARP funds. But thanks to Kanas's investor group, it is one of Florida's best capitalized banks now. John Kanas, welcome to the Diamond District. Good to see you.
See you.
Let's first talk about the prediction that you made that got a lot of publicity, the 1,000 banks to fail in 2 years. Do you still stick by that prediction?
Yeah, and I hope that that's not an underestimate. We've got almost 8,500 banks in this country, and there is a serious overcapacity of institutions. And unfortunately, as the economy continues to remain sluggish, it's getting tougher and tougher for some of those particularly smaller institutions to survive. So we believe that there'll be a continuation of the trend of failures over the next couple of years.
Is this healthy for the country? Because if you say there's too many of it, it's basically consolidation in where you're taking out players who shouldn't have been there in the first place.
I think that when this is done and we look over our shoulders at the results of what's happened in the last couple of years, most of us will conclude that some of these institutions shouldn't have been chartered in the first place. They were part of the over-frothy economy that we all lived through in the last couple of years. But remember that banks need to, in order to stay healthy and to make money, banks need to make loans to responsible people who can pay them back. And while the economy continues to remain in difficult shape, it's tougher and tougher to make good loans and tougher for those institutions to struggle and climb out of the difficulties that they found themselves.
Sure, banking and bubble as well, along with the housing bubble. The concern there, though, the FDIC then is going to have to spend more money to cover the depositors unless a private equity firm like yours comes in and takes over the bank. What was the decision behind taking over the Florida bank?
Well, we think that in the long run, the Florida, particularly the South Florida market, will recover nicely. Can't take the sun out of Miami Beach, and we think that eventually, when we eventually arrive at a more normalized market, we'll see a recovery in South Florida that will inure to not only BankUnited but to the other institutions there. But in the meantime, Florida and Georgia and most of the Southeast is laboring under intense pressure as a result of what they've lived through in the last
Sure. Now, I know your bank is also receiving TARP funds, and you're receiving money to do home mortgage modifications.
Yeah.
There's a lot of outrage out there that, John, that banks such as yours aren't helping the homeowner.
Yeah.
I mean, there's also outrage that if the homeowner shouldn't be helped with our taxpayer money, but if you're getting money from us to do that, why are we seeing still a high rate of foreclosures?
Actually, we're not getting TARP money. We put almost $1 billion worth of private equity into BankUnited that included a loss share arrangement with the FDIC, such that the federal government is sharing the losses of the loans that were in the legacy BankUnited over the next 10 years. But we're not taking any taxpayer money to finance
taxpayer money. I mean, it's not direct, but if it's guaranteed by the U.S. taxpayer.
They're guaranteeing the loan losses over the next 10 years in the old bank that failed. Remember, we didn't buy our bank from the market. We bought our bank from the federal government, who ran an auction that took about 7 months, and in the end, we were the highest bidder for that property. So.
Loan modifications, how is that going? I mean, it seems to be a slow, very tough process, and people are getting frustrated out there.
It is a very tough process, and we're finding it's a laborious process. It's frankly not working as well as many of us would like to see it work. It's difficult for some people to qualify for loan modifications as they're structured today, but we are in constant contact with hundreds of borrowers every day and modifying hundreds of loans every week to try to get people back up on their feet. But frankly, even some of the modification plans are not enough to get people back on their feet to a point where they can make that monthly payment.
Right. And if they can't, they can't. Maybe, they should not have taken the loan in the first place and got suckered in by these mortgage brokers who were offering them the world. John Kanas, CEO, Bank.